Hello everyone and welcome back to Industry Insights. Today we're going to be doing something a little bit different. I'm going to be walking through the EA Q3 fiscal year 20 investor call transcript. I'm going to be reading it over and I'll be giving you my thoughts on some of the highlights. All right, on with the show. Before we get started, you might be wondering what an investor call transcript is, and I'll just give you the short version. In a publicly traded company during the quarterly earnings call, investors or their representatives have a chance to join a call with usually executives of the company in question, and they get to ask them questions live and in real time, and then those questions get answered directly back to the person who asked the question. So you kind of get this back and forth question and answer process that takes place in real time. And it's very interesting because it puts executives and other people kind of in a position where they have to at least give some kind of answer, or they have to give additional direction for the company, or give some type of thought about what they're thinking in terms of the question that the investor asks. So that's what we're going to be going over. I'm just going to start at the top of the investor call transcript and work my way down and pull out some of the highlights. The first thing that we see in the investor call transcript is Andrew Wilson giving an overview of the quarter. And as you can see here, he says, as a result, our revenue and earnings for Q3 were above our guidance, growing significantly year over year for the quarter. We're raising our full year guidance for the second time this fiscal year, and we are on track to post a very strong year against our original projections for fiscal year 20. If you're keeping notes at home, this is good for EA. They're above guidance, so guidance is generally what they tell investors they're projecting. And if they come in above guidance, then the quarter was better than they had expected. Growing significantly year over year for the quarter. So year over year is comparison against last year for the same quarter. The quarter that they're currently reporting on is better than the year over year comparison for the previous year. Raising guidance, again, as I had mentioned, they are raising their guidance to investors, which means we now expect to make more revenue, more cash. We now expect to make more money than we had originally reported in our previous quarters. And then there's more discussion around Q3 and some of the almost what you want to call like the fluff, right? Like, hey, here's our whole company. Here's what we're doing. Here's what we really liked about the last quarter. And then we kind of move on here, and he picks out a few games that he wants to highlight within his opening statement. And he does make particular highlight with the Star Wars Jedi Fallen Order and the library, I guess you could call it, of games that EA is dealing with inside their Star Wars franchise. And within that, you see them call out Jedi Fallen Order. You see them call out Star Wars Galaxy of Heroes, the Star Wars Battlefront 2, and Star Wars The Old Republic, which I think, is released in 2011 now. I'd have to look that up. But he does actually take time to highlight the portfolio of Star Wars games within the opening statements. And he says something here: the power of the Star Wars franchise continues to endure and grow across generations and geographies, and look forward to continuing our momentum with Disney and Lucasfilms. And this is interesting because for the longest time, I know there was a lot of criticism about the way EA was handling their Star Wars franchise, the Star Wars portfolio, and it looks like Andrew Wilson's taking the time to highlight this as a strength of the company. Highlighting Star Wars puts it at contrast to much of the criticism that EA didn't know what they were doing with the license. Now, there's obviously arguments to be made that there was at least a period of time where they appeared to be making bad, incorrect, however you want to put it, decisions with the license. But with Andrew Wilson bringing Star Wars right up to the top and highlighting at the start of the investor call, he's making the case that, hey, this is a strength of our company and we want to highlight it. Moving on, Andrew Wilson covers a few games I'm sure most of us have heard of. Apex Legends gets called out in the opening, specifically referencing Season 3 being bigger than Season 2, with higher active peaks and daily users. He then goes on to talk about Madden and FIFA, which probably predictably are doing rather well. Madden NFL 20 is, at least according to Andrew Wilson, is our most successful game ever in the franchise. And then we see him talk about FIFA Ultimate Team and engagement with fans. And then also he calls out FIFA 20 is also the #1 most engaged title in our subscription services. And remember, this is just Andrew Wilson speaking at this point. This isn't an answer to a question. These are his planned remarks. So this stuff is going to be really sanitized, and it's going to be very, it's going to be very designed, right? It's coming from him in the way that he wants it to come out. And he ends this section. There's a couple mentions about some of the other games they've come out with, like The Sims and Need for Speed and some of the other products in their catalog. But he starts to wind down this section by just talking about everybody's favorite word, live services, right? And he says, live services are delivering value for players and continuing growth for our business. Our teams are among the best in the industry. It is constantly building on feedback to expand and enhance the experience of players. The content updates and in-game events in Ultimate Team, creative and original new seasons in Apex Legends that expand the characters, and so on and so on and so on, right? This is, again, even if you don't like it, this is EA's bread and butter. Live services is how EA produces that revenue, and this is what Andrew Wilson is trying to get across. Like, we're going to deliver a host of games, right? And some of them are going to be live service and some of them may not be. But what he's saying here is I want to highlight that these live services are delivering value for players, right? This is EA's bread and butter, and he's calling that out specifically for investors here. So once he finishes this section, Blake Jorgensen talks a little bit about the financials. If you want to read the financials exactly, they are certainly on their investor website. The link will be down below. But, Blake Jorgensen talks about the financials. Relatively cut and dry area. It was a good quarter for EA, so there isn't a whole lot of debate about the financials or any of their costs. Costs and everything were relatively level. But we're going to skip some of the financial conversations, and we're going to kind of head down into the question and answer section where we get into where the investors start answering or start asking questions to Andrew Wilson and Blake Jorgensen. The first question that comes from investor Andrew Paul Erkowitz, I believe that's how you pronounce it, I can't be exactly sure, but Andrew Paul Erkowitz says, seems like sales numbers initially are roughly the same, but one's got live services and one doesn't. And what he's talking about is he's talking about the past 2 Star Wars games, and assuming, again, based on his question, that is Jedi Fallen Order and Star Wars Battlefront 2. But he says, okay, seems like sales numbers are initially roughly the same. One's got live services and one doesn't. How has that shaped the way you think about future game design as we head into the next console with a big focus on live services? And what he's driving at here is he's saying, okay, EA, you're saying live services are important. We also have consoles coming up, but I've also noticed that one of your games, one of your Star Wars games that you've just released does not have live services. So kind of explain that to me a little bit better, because if you're driving live services into my head, why does one of your Star Wars games not have it? Or can you explain to me that you're thinking in that regard? And Andrew Wilson picks it up and gives an answer that should make a lot of people happy, particularly those that are looking for those non-live service single-player type experiences. He explains to the investor, we've got a broad player base, and we need to meet the demands of that broad player base. Almost cautioning the investor that, yes, live services is where EA's, or should I say a majority of EA's revenue is going to be generated from, but it can't be the sole point of revenue generation. And so that includes making sure that we produce those non-live service single-player experiences that the market still demands. Reading between the lines on this one, there's a tacit admittance by EA's executives that live services in some cases may actually harm the business case of the game itself. The next question is also from Andrew Erkowitz. It's a follow-up to his first one. And he talks about, if I could just ask one follow-up, he says, as we think about live services, but also more distribution channels, more easier, hopefully cheaper marketing. He's kind of getting off into some other questions here that are not going to get answered. But he says, should we expect EA to launch more than 8 games when we look out 3, 4, 5 years? Or is 8 a good number? he's saying. And Andrew Wilson picks it up and he says, I would start by saying 8 is a lot. And that's very reflective of the modern video game AAA environment. We've gone from, 10, 15 years ago when the big AAA publishers would produce, 15, 20 games released in a year. That number has been pared down so far that we're now getting into like, hey, we're doing 8 games within the next kind of generation, that when we start doing that, like 1 through 5 year outlook, right? Andrew Wilson saying, hey, we probably think 8 is a good number. But what's also interesting in Andrew Wilson's response is that he talks about bringing in additional titles into their subscription services, and he calls them high value, low friction business model within that subscription service. And what that means is that high value, low friction is the player should be able, or could, or does see the value in the subscription, right? If I give EA so many dollars a month, I get some value for that. But it's a low friction business model because the consumer doesn't feel like that there's a risk in trying something. So if there's a new indie title or a AA or type of smaller or riskier title within the catalog, it's low friction for the end consumer because, hey, I'm already paying a subscription fee. I might as well try this game. And it's really interesting what Andrew Wilson says in here. He says, and so I feel really good about our capacity to continue to execute and deliver great high quality content and potentially more than many others in this industry. We're also going to have the opportunity to reach our player base with these very new and interesting titles from third party and indie developers. And again, what Andrew Wilson is doing here is he's trying to show where they're providing value in their subscription models with low friction, low resistance for the end consumer to try it. Now, moving on, we get to a Matthew Andrew Koss from Morgan Stanley. And Matt is asking mostly about the mobile business. He says, it seems like you made some great progress, obviously, on constant currency growing year on year. Can you sort of talk about what you're seeing in that business and maybe any thoughts you're having on potentially partnering with other mobile app developers? Okay, so Blake Jorgensen picks this one up, and he goes on to explain that they do have a partner that's helping them develop mobile Apex for a global audience. And I mean, you can read into global what you want, but the target market in something like this is going to be China, right? But he does say the partner is helping us develop a mobile Apex for global, and more to come on that in terms of timing, but that's a big upside for us. So he's kind of digging into a little bit more to the whole, yes, mobile is still something we're looking at. We're using an IP that we've been successful with to develop that bigger global mobile footprint, particularly with Apex Legends. And he says more to come on that in terms of timing, but that's also a big upside for us. We have not built a lot into our forecast for next year on that because the timing is always uncertain. So what he's letting the investor know here is that there isn't a lot of potential revenue from an Apex Mobile modeled into the next forecast because, as many of you probably know, working with China and the Asian Pacific region almost always requires some type of partner to enter the market. And that partner usually has to deal with government regulations. They have to get the games approved. I think they have to show some type of development in country, particularly for a lot of that stuff. So they do have to work with that partner. And so the timing of when that Apex Mobile might come to that region is uncertain. So Blake is explaining that we're not modeling a lot of that into their current forecast, but that could change. Moving on down the questions here, there is a response from Blake Jorgensen to a question about FIFA Volta. Now, I'm not familiar with the FIFA franchise as much as other people would be, so it's a little bit harder for me to comment on Volta and some of the other things that they're driving at here, but I can be very clear in something that Blake Jorgensen responds to in terms of the response to the question about FIFA Ultimate Team and Volta. And he says, people won't play Ultimate Team if they're not having fun. And so the key is, how do you build an event that they're going to have fun competing and interacting? It's a social network. It's all about the design of the events. And I think the teams continue to get better and better every year. But what he's driving at, and the sentence right down below this really gets to his point. He says, and it's the thing that people sometimes don't understand when it comes to live services. It's not about the monetization. And I really want to underscore that, because as anyone who spends any time in that gaming social media sphere, listening to other YouTubers, perhaps reading something on any of the popular websites, there is this big target essentially on monetization, driving home the fact that all these live service games do is monetize. It's all they do is monetize and monetize and monetize. But what Blake Jorgensen is saying here is he's saying, okay, you just can't create the live service and add monetization to it, right? There has to be a draw to it. There has to be a reason that players want to engage with it, whether it's the design of the event or if it's the social aspect of the event. And he's saying it's not just about applying monetization. It's about how they create that, quote unquote fun for people to be able to come in and enjoy it. So just wanted to call that piece out because it is an interesting aspect that does kind of contradicts a lot of the whole, live service is just about monetization. It's not about fun. It's not about adding that value for the player. And I think what Blake Jorgensen is saying here is that really we're trying to make sure that there's a compelling reason to monetize the product. All right, moving on. We get to a response to a question about growth in Apex Legends, and Blake Jorgensen takes the first stab at this, and he says, but when it comes to our May guidance, we'll try to give some people some sense of it, what we're going to stop talking about monthly or weekly or daily active users, because I'm not sure what anyone could do with that information. So if you've been around the industry long enough, one of the big metrics that investors and companies like to talk about a lot is monthly active users. And what's going on here is that Blake Jorgensen is saying that they aren't going to be as specific with this kind of information because he doesn't believe that it's relevant for investors. And reading between the lines, what I think Blake Jorgensen is getting at is that they don't want people concentrating on short-term windows. So, there might be a spike in users, there might be a fall in users, and they don't want investors looking at that information and using too small of a window of information to make a decision. I think what he's getting at here is that we will give more long-term and global views of growth when it comes to Apex Legends, and they'll try to give the best guidance that they can based on Apex Legends over time. And this kind of points back to an earlier metric that was going around. If you remember, there was a short period of time, probably a couple months that I remember, when there was a lot of doom and gloom around Apex Legends as Twitch numbers were down and people were claiming that active user numbers were down. And when the next EA investor report came out after that quarter, Apex Legends was great. Active users was fine. Financially, it was doing great. And I think what EA has shown over the past couple of seasons is that Apex Legends continues to grow both in average users and revenue. Continuing on, Jeffrey A. Cohen asks, could you talk about how big of a driver Jedi Fallen Order was for new subscribers to Origin Access? And then broadly, just can you talk about how churn has trended with your subscription products? And I think this gets to a question a lot of people want to know, is that this trend to subscriptions, how is it working out for the companies that are employing them? And is it growing? Is it shrinking? What's the churn rate like? Are people coming in and then leaving shortly after? And I think it's a question on a lot of people's minds, especially as we see the industry expand into things like Xbox Game Pass and EA's Access and Origin programs. And Blake Jorgensen picks this one up, and he says, Jedi Fallen Order added to the Origin Access model, but it's hard to understand at this point in time the bigger picture. They're not seeing a ton of changes in churn, meaning that seeing people come in and out and in and out, but they don't have a long-term data point to look at. So he beats around the bush a little bit with the answer here. He's not very direct with much on the subscription level here, but he does say that they're continuing to see it grow, and that they believe when Jedi actually goes into the regular access service, which I think is EA Access, that they expect that to create growth as well. But they don't have a lot of long-term data here, and there isn't a clear answer to the question at this point in time. All right, next up, I just want to highlight something that Blake Jorgensen gets into in a response to some additional guidance. And I want to read this one particularly closely because there's something really important in here that I want to point out that contradicts much of the social media YouTube sphere of gaming that likes to talk about how these publicly owned game companies only think in short windows and they only think in immediate cash flow. And Blake Jorgensen says, and that's why you've seen growth across the software business as part of this overall video game business in every single console cycle over the last, 20 plus years? And so that's where people sometimes get hung up. They get too focused on the short term and not think about what's transpired historically. And the power of the new consoles is going to be substantially greater than the existing consoles, which means we can just do a lot more. And he goes on to mention some other things there. But 2 big points in here. One, particularly when it comes to EA, but also other publicly traded companies, they do not think in just short-term scenarios. In fact, what EA has done the last couple of investor transcript reports, they've actually pushed back on investors looking for some of that shorter term growth, and they're saying, some of the stuff we're going to hold on to because we see a longer path to profit, particularly with the new consoles coming out, particularly with some of the things that they want to do with some of their franchises. They need to hold on to them and hold on to whatever is coming up next until they have the power in the ability to do so in the new consoles. Now we know probably PCs can run whatever they want to do, but they're building for kind of basically a bottom line there with the consoles. And I just want to point this out because this contradicts the very popular notion that publicly owned video game companies only think in short-term cycles and only think about the next quarter or the next 2 quarters. It's verifiably false, and it's not true that they're only short-term focused. Okay, we are nearing the end. And what I want to do is just kind of go through a lightning round of 3 points that I want to make to wrap up this industry insights. Number 1, Blake Jorgensen answers a question about the Switch, and based on EA's data, they do not see the Switch as a platform where they can have a top-selling title because of Nintendo's dominance on that platform, but they will have some more things about the future on that platform, and they're pleased with the growth there, and they're still looking at it. Next, they talk about Plants vs. Zombies, Star Wars, and Need for Speed. Star Wars, over-delivered. Plants vs. Zombies, slightly under-delivered. Need for Speed, probably right about where they expected. And lastly, there were some questions about Vince Zampella and his new role within EA, looking over both Respawn and the DICE studio, and they just wanted to clear something up. They said, just to be clear, Vince hasn't stopped working at Respawn. He's still running Respawn. They're asking him to do more, and that kind of clarifies what his new position is within the company. So a lot of stuff to take away from this. If you'd like to view it yourself, there's a whole bunch of other stuff in there. The link will be down in the description below. I highly encourage you, the listener, the reader, to dig into it yourself, form your own conclusions based on what you see there. But I hope this was educational. I hope you enjoyed it. If you do, hit the like, and we'll talk to you next time. Have a great one.